Now, I've done this presentation 25 years, 30 years. And I used to do it when I was in Jessup Beach, Florida. We used to run training classes like this. And we'd have 20, 30 people there sometimes, 10 others, for free. That's how we get started in this. Because I was upset at the training that agents were getting, or not getting.
Right.
They were being misled, they were, making this way too complicated and stuff. So I tell every agent that wanted to, they could come to the class. And there was an ulterior reason. What?
Ulterior motive.
Ulterior motive, there we go. Because I was a recruiter for MetLife. I've been for Ameris at the time?
Yeah.
Probably Ameris. Okay, so hopefully, if they like what they saw and the training they got, they would come with us. And a lot of them did. So it was an easy way to recruit without trying to recruit.
Right.
Because I wasn't charging for anything. I wasn't expecting them. But they saw what they did, what we did, and how we're helping people and stuff. A lot of people decided to come with us. All right. But anyway, so I would go down to Miami and Fort Lauderdale and train groups. I mean, we had large groups of people that were were signed up with Ameris. This was one group down in Miami was, I don't remember who it was now. But anyway, they had like 50 or 60 health insurance agents. And they wanted to get them to sell life insurance. And they signed up with us. So I go down and say, I'm going to train them. So I go down there, and I'm going to do what I did with them. So I told them, I says, this presentation that you're going to see in a few minutes, when most people hear it, or your clients hear it, most of them say, why would anybody buy life insurance? And that happens almost every time. And the next one that happens is, they'll say, this is the first time anybody's ever explained life insurance, and I actually understood it. And this is what you get from that. I says it happens all the time. So I'm getting ready to do my presentation, and the manager comes up and says, can I bring my clerical staff in? I said, yeah, fine. So then I do the presentation, and here's how the presentation goes. And this is what I say to clients, how much do you know about life insurance? Well, I'm going to teach you everything I know, and I don't know too much. Okay. First of all, there's term insurance. Term insurance is the least expensive initially. Okay? The problem with term insurance is the premiums are guaranteed to go up over time. Okay? And when you get all done, okay, you're not going to get any money back. If you think about it, it's just like renting.
Doesn't it typically just end though? I mean, I know you can continue if you get a 10-year or a 20-year, you can keep it, but you pay an outrageous rate.
Yeah. Remember, I'm trying to keep it simple for the client.
Okay.
Okay. So it's the least expensive initially. The problem is the premiums go up over time, and when you get all done, there's no cash. You don't get any money back. If you think about it, it's just like renting. Did you ever rent a home, or when you went out on your own? Or a apartment? Okay, was it the least expensive initially? Mm-hmm. The problem is what? The rent goes up all the time, doesn't it? Mm-hmm. And when you get all done, what do you get back? Nothing. Bunch of receipts, right? On the flip side, now, I used to always say whole life, but it could be permanent life insurance, it could be index universal life, it could be whole life, cash value life insurance, whatever you want to call it. Okay? It is the most expensive initially. right? The problem, the good thing about it is, the premiums are guaranteed to be level, but they can go down and either stop. And as long as you keep it 5, 10, 15 years or longer, okay, you're guaranteed to get all your money back, plus a bank type return. If you think about it, it's just like owning a home. Have you ever bought a home? You own a home? Was it the most expensive initially? But the great thing is, one, the payments are guaranteed to be level. They can go down, or they'll eventually even stop. And when you get all done, as long as you keep your house 5 or 10, 15 years, you're guaranteed to get all your money back, plus a bank type return, aren't you? Same thing. Okay, and in between, there's a whole bunch of hybrids. Okay? They're going to be more expensive than term, but less expensive than whole life permanent, whatever. Okay? Generally, the premiums are going to be level, but they can go up or they can go down. And hopefully, if you keep it 10 or 15 years or longer, you'll get all your money back. Now, I equate this as to owning a mobile home or a condo. If it's a mobile home, it's going to be a lot less than the permanent, but because of rent fees, lot fees and everything else, what you're paying per month can go up or go down. And when you sell it, or try to sell it, hopefully you get all your money back or make at least some money on it. If it's a condo, again, it's going to be less than owning a home. You're going to have condo fees and everything, so it's going to be, the premiums can stay level, go up or go down. And hopefully, if you keep it 10 or 15 years long, you make all your money back plus a bank type of, plus some. Any questions?
Oh, anybody?
Now, I told you the clerks came in, right? When I said, you got any questions? The clerk says, raise your hand and says, why would anybody buy term? The crowd broke up. You know, because and they thought I set it up. So then the other clerk says, you know, I've had every, you raise your hand and says, yeah. She says, you know, I've had every one of these people come in and try to explain to me the difference. This is the first time I understood it. They just roared. Because that's what happens every single time.
So, yeah, I used this for the first time 2 weeks ago, and that's exactly what happened. Exactly.
Yep. So you think we're kidding? We're not. That's exactly what happens.
Now the only bad thing I say about this presentation, when I was first starting the business, I used this, being 19 and dealing with a bunch of 19 and 20-year-olds. The only thing you can sell them is term.
Yeah.
This killed more sales for me than anything else. They just couldn't afford the permanent.
And they wouldn't buy term.
They would not buy term.
Okay. Make sense?
You don't want to be homeless, do you?
No, he didn't know how to.
Oh, yeah.
We taught he knows now how to do it.
Oh yeah.
All right. Now, why does this work so well?
Relates.
Simple, they can relate to something that they see.
Yeah, exactly.
Something foreign to something familiar.
Yeah. It relates. And by the way, permanent life insurance is a lot like owning a home. There's a guy that used to write the National Underwriter. Remember that magazine? On newspaper, what it was back then. And on the back page, there was a gentleman called Woody Woodson. Remember him?
The
Okay.
last
anyways.
word or something.
Excuse me?
Was the last word or something?
Yeah.
Like that? I remember.
Yeah.
the article.
He wrote the back page, and it was Woody Woodson. And I have a book called The Best of Woody Woodson. If you can find it, get it. Because it is a quintessential book on life insurance. Okay, on whole life. And it explains why whole life, in a lot of different articles and stuff. I mean, there's like 40, 50 articles in there or whatever, of why whole life is a lot, or permanent life insurance is a lot like owning a home.
Can you spell his last name? The first-
Woodson, Woodson. Woody Woodson. Benjamin W. Woodson. Benjamin Woodson. But it's Woody Woodson. Everybody call him Woody Woodson. The best of Woody. I love it. I've referred to it a number of times. That's how I come up with this, by the way. Not that he did this, but after, anyway. Think about it. And how much it is like holding a home is like whole life insurance or the vice versa.
It's on Amazon.
What?
$4 on
$4
Amazon.
bucks.
You
There's
kidding
a book.
me?
Here it is.
Woody,
Here on Amazon.
our guy.
$27.99, used very good.
Yeah. Yeah. So if you can get it. I love it. I go back to it all the time when I'm reading his stuff. But anyway, think about it. You buy a house, and it's obviously a lot more expensive than renting or owning a home. I mean, renting getting a condo or mobile home. So it's the same that way, right? It builds tax deferred, doesn't it? Just like life insurance. You don't pay any taxes on it until what?
You draw.
You sell it. Okay? You can loan, and you can take a loan out against it, can't you? Okay? Just like you can on a home. And you still don't have to pay taxes on it until what? You sell the house. Okay?
Yeah.
Yeah, just ordered it.
Yeah.
Okay. I mean, so it's just like owning a home. It's really not that much different. Okay? It's got guarantees on it and everything else.
Go to Amazon.
All right? Now, it's not going to make you rich. It's not a, pie in the sky investment, but if I can make a bank type return consistently, isn't that a pretty good deal? So if they, look at this and say, hey, this is a good deal, or when I explain it to owning a home and equate it to owning a home, what are they going to say? Yeah,
Why we didn't do
Makes
that?
sense.
yeah,
Does that make sense to you?
okay. Now, they'll say that, like A.L. Williams or idiot there,
Dave Ramsey.
Dave Ramsey or Susie Orman or whatever, say, oh, life insurance, that's a crappy investment, so you don't want to put your money in that. But they also say owning a home is a crappy investment. Or Susie does. Okay?
Yeah, but didn't she recently get busted? Doesn't she have a wife or something?
Oh yeah,
She just got busted for having something that she personally has, but rails against other people having.
yeah.
Yeah, the same bonds that the whole life buys.
Okay, yeah, that's it.
But anyway, that's, remind me to tell them about the Pirates of Manhattan too.
Yep.
All right. So one of the biggest gripes is, it knocks against whole life insurance is what? Or any permanent life insurance.
Expensive.
Well, besides being expensive, but we already covered that, right? So more, we put that in. What's the next biggest gripe?
Can't get your money out of it.
Low cash values in the early years.
It's any investment.
Yeah. Well, I agree with you, but that's what they say. You can't get all your money back. Well, if I put my money in mutual funds, I get all my money back. Wait a minute.
Oh, casino, if you want a quick turnaround.
Yeah. But, so my answer to that is, let me ask you, if you buy a house and you sell it tomorrow, buy it today and sell it tomorrow, do you get all your money back?
No, you took the bath, probably.
Yeah. And you're probably gonna have to short sell it and everything else, aren't you?
Well, cool.
Yeah, so there's no difference. Well, the other gripe they have is, I can't get access to my money. Okay? If you put money in your house, can you get access to the money? No, unless you do what?
Sell it or refinance.
Yeah. Is that the same thing here? I either have to get rid of the policy or take a loan against it. Same thing.
Yeah, but the thing is, getting a loan, if you refinance, don't you have to qualify to refinance?
So actually,
Yeah.
this is what?
Better.
Easier.
Not easier.
Because I can get access to this money anytime I want, or a little loan. So all the good things they have knocks against it. If when you equate it like this, you say, yeah, it's pretty a good investment, isn't it? Okay? Now, let me ask you, if you're putting money into the bank, mutual funds, anyplace else, will they, if you become disabled, will they put the money in for you?
Nope.
No, sir.
Will we?
Yep.
Yep. It's the only self-completing plan out there. Is there any other plan to put the money in for you if you can't? If you live, you're going to put the money in, right? If you become disabled, they're going to put it in for you. And if you die, they're going to pay you what you meant to save during your lifetime, aren't they?
Yep.
It is one terrific plan. Whether you want to use whole life, index life, doesn't matter. Okay? Does that make sense? Tell me what other investment you can do that with. We already talked about, the guarantees in this. Is there any other investment that will guarantee you a rate of return?
Annuity.
Either besides annuity, other than insurance products.
Well, CD
They'll guarantee it
for the period.
for the period. Okay. Not long term, will we? I mean, if, as Ben Feldman would say, I think it was Ben, one of those old timers, anyway, would say, if people knew what life insurance really did, they'd be beating a pathway to our door. And I totally believe that. It is one of the greatest things since sliced bread. It really is. There's no other vehicle that can match it.
Thing is, you pretty much have to buy it at a proper age, though. I mean, what are you going to get out of it if you buy it when you're 60?
All right,
I mean,
it
you still get
depends
something
on,
out of it, but
it depends on why you're buying it. Will it accomplish more than what any other investment will do, no matter what age, if you're looking to get protection and everything else?
protection, yeah.
There's no other vehicle that will do it. So, I mean, if you're looking to, you can't save enough money for a death benefit, can you? Because you don't know when you're going to die. So, yeah, it's expensive when you're older, but it's not meant to be a savings vehicle at that point. But on the other hand, excuse me?
So compared to what?
Yeah. But on the other hand, guess what? As long as you leave the money in there 10 or 15 years, it turns into a good investment no matter how old you are. Right, Jeremy? So it depends on how you're using it. For example, one of the things I mentioned earlier quickly is we believe in using qualified money up before non-qualified. Why? Because I got to pay taxes. We got mandatory,
required minimum distributions.
Required, yeah, minimum distributions, thank you. You know, and all that stuff that goes along with taxes and all that, okay? So we want to use up that money first, so that this can grow for 10, 15 years or longer, so we can take this money out, what?
Tax-free.
Tax-free. Now, think about what I just said, take it out tax-free. See, if you think about it, you know, Social Security is being taxed, right? So, the higher your income, the more you pay in taxes on your Social Security. The lower your income, the less taxes, or you may not even have to pay taxes on your Social Security. If I have tax-free income from life insurance, now it doesn't work on other things, and we'll talk about that in a second. But if I have tax-free income from life insurance, and just have that and Social Security, guess what? I don't pay any taxes.
Yeah.
Think about that. Will that make your money last longer? Will that give you more spendable income?
Yep.
Okay? Think about that. That's the beauty. So, to answer your question, yes, you're right, no, you're wrong. Because as long as you can leave it there in the bill 10 or 15 years, doesn't matter, especially if you're overfunding it, up to the Met guidelines. Okay, it's just how you're using it. That's why I say everybody's situation is different. We don't know what they have, what they're going to use it for. Okay, so I think at old ages, life insurance works great. It does build good cash values and stuff. Okay,
It's a phenomenal wealth transfer
Speed,
tool.
fund it.
excuse me, and encourage.
Yeah,
Yeah.
speed to fund it.
Oh yeah. Oh, you do. Wow, that's a lot of attention to people. Gets complicated. Well, yeah, there's a lot of different things you can do. But guess what? You guys have been in business how long? You
Long enough.
Let's call it 3 years.
okay? Now
5.5.
9. Okay. Now you guys have been in forever. You know, when was the last time anybody told you about this?
When I watched a video of you previously to this.
Nobody's talking about it. And it's actually how you help people. I mean, I've had, well, we talked to Andrew and all these guys. Did they ever hear about this stuff? When we did the first case for Andrew, we go, huh? What? Why do you want to do that? Well, you know, nobody will take the time to really understand and do it. And we've had so many agents on. Louis Wood, great agent, knows he's a lot smarter in a lot of things than we are. You know, when it comes to charitable giving and all that stuff. We did this with him, and he goes, okay. You know, no, but this stuff isn't being taught. That's why Jeremy is the master at doing these cases. Okay? And he can make you money. You believe how much money he can make.
I'm going to go over the arguments for and against whole life versus term and invest the difference.
Okay? Guess what? This just answers the question.
Just does it.
Yeah, this stuff does it. Okay? If you really want to do it, you know, you do the 2-page presentation. Okay? If you buy term and invest the difference, here's what you're going to get. Okay? You do it our way, here's what you're going to get. Now, which one makes more sense? That's as simple as it is. Everybody makes this way too complicated. Okay? It's not that complicated. I mean, Jeremy can do a fun little thing in 10 minutes, 5 minutes.
I did 1 in 10 this morning, yeah. That's what I was working on this morning when you interrupted me.
Oh, do you have it?
Uh-huh.
You wanna put it up?
I got it.
See, if you tell them and try to explain it, they may or may not believe you. You put it black and white, are they gonna believe you? Yes. It's as simple as that. Don't waste your time arguing. When we go through the Brian and Heather case, I think you'll see it again.
We're gonna practice probably the fact find questions. I've got a client.
He's gonna do it.
Okay.
Well,
On Tuesday, I have to talk with a husband and wife. They have a automotive shop that they do repairs, and they're saying that they want to somehow do something with the business and their life insurance. So I bet that's
again, you're putting the cart before the horse. Okay? You don't know what they want or anything else. Why are you even worried about product?
so you just that's what I'm saying.
You just go out and fact find.
Just ask
Just
them
do
the
it.
questions,
Yeah.
and they'll tell you as you go through.
Yeah.
All right, this case, this is one of my mentoring guys' cases. So he backs me a fact find. This wonderful document. I'm actually going to pass this around because it's interesting. This is one that he kind of the fact finder kind of modified. He actually, because he is an older gentleman, he's still learning the question technique, so he has questions built into it. But this is a mortgage lead he got. He buys mortgage leads. Says, I'm trying to get him out of this, out of that area. But he's kind of struggling with it, and his fact finds him a long way. We kind of yelled at him this week. He's bummed. And then he sent me these two great fact finds last 2 days. This one is an older